Good morning. Welcome to Stock Market Today. It's Thursday, December 10th, 2020. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. Get a lot of the content for this show. Daily stock ideas hit your inbox for you to consider every trading day before the market opens. U.S. equities weaker yesterday. We can't go up every day. We can't make a record high every day. Tech comm services were the worst performers, weakness across the FANGs, semis, and software. Interestingly, the cyclical areas of the market were your gainers: energy, industrials, and materials, higher on the day at the sector level. Treasuries were mostly weaker. We're going to take a look at that a little bit later on in the show as well, because nice little pullback, especially in the NASDAQ, but not exactly running to the havens, are we? Dollar was stronger on the euro and yen. Gold, again, another haven, down 1.9%. WTI crude higher by about 2% on the day, though off the worst levels crude oil was down 20 basis points, though off the worst levels, despite a big inventory build with the data that was released yesterday. So we get to the desk this morning. Futures are a little changed. Let's call them mixed. They're off their best levels. Asian equities mostly lower overnight. South Korea, Japan, and Hong Kong lagging. China was slightly higher. European markets are mostly higher here this morning. Treasuries are stronger with the curve flattening. Dollar stronger against the yen, but weaker versus the euro. Gold down 10 basis points. Crude oil up 1.5%. And here's your structure. You can see the black candle on the S&P. The middle chart is the one that's most interesting. Actually, my friend Andrew Thrasher on Twitter last night posted, I think, the key question is it a false breakout in the Qs, right? Take a look in the middle of the page here. QQQ, topside breakout, and now a pullback to slightly under those September highs. And, Andrew posts a great question. Is it a false breakout in the Qs? Certainly caught my attention, certainly something to pay attention to. It's going to make today an important day. If we can catch a snapback rebound above the breakout level, that'd be encouraging for the bulls, right? You can see IWM so far, no danger of kind of back testing to the 170 level just yet. SPY, you're watching 360. 340 key level. Above 340, I think you're playing for 413. Below 340, now you're playing for the chop and the slop, and then you have to watch road break below 320, which would invalidate the trend, right? So roadmap, I have no idea what's going to happen. Weight of the evidence supports higher, right? Based on everything that we talk about here, day in and day out, week in and week out. We watch the changes and we watch the relationships and we watch the intermarket themes and trends. But at the end of the day, nobody has a clue, right? Which is why we map it out in our heads and we say, if this, then that. So if we get back below 280 on the Qs, you got to play for the slop, right? Then you're probably back in the sloppy consolidation. And if you break 260, you're in a downtrend, right? You know what the levels are for IWM as well. I don't have to go through them. We've been hammering them home here day in and day out. So that's our roadmap. Weight of the evidence supports higher. Today's a big day for the Qs, I think. You want to see a quick snapback, retrace. One of the things that kind of has crossed my mind, though, is are investors just kind of lightening up in these big mega cap fan mag type names to make room for these IPOs that are hitting the market, right? Opportunity to play the pop. If you're a portfolio manager and you think you can get an allocation to DoorDash, right, or Airbnb or Roblox when it comes, and you think you're going to get a pop, why wouldn't you sell some of your Apple, your Amazon, your Facebook, your Google to make some room for a name that could give you potentially a big IPO pop, right? Look at where DoorDash traded yesterday relative to its IPO pricing. Now, I'm not talking about trying to get it in the aftermarket. I'm actually talking about getting a piece of the IPO. A lot of the big institutions can make that decision. So I wonder if some of that's going on. It's an interesting thought. I don't see many people talking about it. Market in a minute. Stocks pull back. We've talked about that. Breadth remains strong. Can it be too strong? Maybe. No flight to havens. on a down day. Treasuries trade lower too. XLE outperforming SPY for the first time in our model since 2018. Futures point to a mix to slightly higher open here today. Major indices from a power bar perspective, Dow down 46 bips, 4-1 bulls to bears. S&P down nearly 1%, 92 basis points, 124.42 there. NASDAQ, big underperformer on the day, 17-10 bulls to bears. Small caps, an outperformer. And there's your bonds ticking lower, right? Kind of interesting on a down tape for equities, bonds still tick lower. According to the Chaikin power bar, small cap stocks and large cap stocks are still strongly bullish. So, one day does not a trend make. We get a little bit of information. We'll probably get more information based on what we're seeing here today. So that's kind of an interesting point. Stocks of the day now. We're running with the screen here. And this screen's kind of interesting because I was posed a question last night on a call that we host with clients. We host 2 calls a week, Mondays and Wednesdays, for myself with clients. And somebody said, if you're aggressive and you're long and you're bullish in the market, but you're seeing a lot of new ideas that potentially look compelling. How do you know, what do you sell to make room for new ideas, right? And it's kind of interesting, right? Like, what do you sell? The institutions, have to make these decisions too. What do you sell to make room for DoorDash and Airbnb, Roblox, and some of these high-profile IPOs? I don't know, right? That's a case-by-case basis, obviously, but to me, relative strength has to be your guide or one of your guides, right? So what I did here was simply look at the Russell 3000 and screened, didn't care about anything else, didn't care about the rating, didn't care about anything else other than relative strength. And I wanted to screen for names where relative strength turned weak this week, right? So new relative weakness. And it produced 33 names, right? Some of them have been big winners. CMI, Accenture, Costco, right? They're bullish rating, but now they're lagging. So if you have prospects for a good name, look at Nautilus, right? NLS, the huge COVID winners. If you have profits and then you're seeing opportunities, why would you hold on to something that's now beginning to underperform? It should at least be in the conversation that you're having with yourself or with your investment team, if you have one, for names to potentially sell, right? To make room for the names that are coming on, right? Part of the rotation. So I wanted to run that screen. I thought it was interesting. Let's take a look at the sector tracker now, moving to the last 5 days. Energy, industrials, materials, top of the list. That screams reopening, cyclical, rotation type trade to me. Staples, don't want to see them in the top 4, but they're there right now. Would be more concerned if utilities were with them. They're not. They're at the bottom of the list. Healthcare, fins, also positive past 5 days. Discretionary REITs, tech, middle of the road. Comms, utilities, bottom of the list. A lot of the same, right back and forth. Broadening out, more participation. Take some off of mega cap tech. Put it into industrials. Put it into energy. Put it into materials. You're seeing it. It's happening. We've been talking about it in real time for 6 months now. You're watching it play out. How many times now in the past 2 weeks have you heard me talk about energy? We're going to look at it a little bit later on. How many times in the past 6 months have we talked about materials? Take a look at XME. Now, over the past 6 months, it's outperformed the S&P by 25%. Right? 9 bullish stocks, 0 bearish stocks, pitching a shutout, number 5 of 21 subsectors. Reliance Steel, RS, Alcoa, AA, and United Steel, X. Very bullish, and bullish respectively. Look at the base metals. How many times have you heard me talk about the copper to gold ratio? And we connect the dots. We get to the point where you're just connecting the dots. And you're saying it makes sense to own names like this because they're holdings in a fund that looks like this. June, July timeframe is when we started talking about materials. Well, here we are in early July, beginning to outperform. Rating turns bullish on XME, very bullish, 9-0, strong trend. Probably a little overdone here in the near term as it has gone parabolic, right? Overbought, solid money flow. Maybe you're not chasing here, but you see my point. You're seeing the rotation, and it's fascinating to watch. I don't necessarily think I'd be chasing here, but obviously it has to be part of your conversation. Let's take a look at what's trending now. Movers and shakers. Nielsen had an investor day, stock higher. Lowe's had an investor day, stock higher. Lilly gave some clinical data on one of their drugs, stock higher by 5.8%. GE actually paying a $200 million penalty, but the stock higher by 4%. Maybe investors thought it would be more than that, and $200 million is a reprieve. Who knows? I'm not that close to that story. Up 3.9%. Ralph Lauren. No news. Yesterday, up 3.8%, but did catch an upgrade today at Goldman Sachs. So Ralph rebounding here a little bit. Loser side of the board, Corvo. Semis were under pressure yesterday as part of the tech tape selling off. Corvo down with semis was also initiated in neutral by one of the smaller shops. So maybe that had a little bit of a play. I'm not sure what was in the note. Skyworks, no real news, but semis under pressure yesterday. Fortinet, FTNT downgraded at JP Morgan. Dexcom had an investor day, some commentary about maybe guidance next year and longer term plans. Stock down 4.25. Paycom, nothing company specific there. PAYC sent that stock lower 4% on the day. No news. Let's dive into the charts. Breath still strong. All right, percentage of the stocks in the S&P 500 above their 200-day moving average is over 90%. That's solid. I actually wonder if it's almost a little bit too overdone in the near term. I think it's a possibility. Intermediate term, still a healthy majority. 79% of the stocks in the S&P 500 are above their 50-day moving average, right? So breath, strong. When we look at percentage of stocks above their 20-day, not as compelling. It's come in a little bit, but still solid. I'm just trying to pull it. It's not here. It's in my note. We're at 69, so we've come in a bit, but still solid in terms of healthy majority. If we think of a healthy majority as over 60, still not bad. So something to kind of keep in mind, keep a look at. The breadth metrics in the marketplace. Continuing to point to a healthy majority of stocks being in uptrends for their time frame. So we want to obviously pay attention to that as closely as possible. We talk about it every week. We watch it. It's okay. So breadth is still strong. Cap weight energy begins to lead. This is here's XLE, just the big daddy of energy. Starting to outperform. Now, our rating has not turned yet, right? We've talked about services where the rating has actually turned bullish and it's outperforming. Rating on XLE hasn't turned yet. It's still neutral. But look at the relative strength. And if you look at the histogram of relative strength on the Chaikin charts, right, for those of you who are taking the trial and who are Chaikin clients, you see it's perking up. It's actually starting to outperform. It's gone positive. That's kind of interesting. XLE itself has some room to those interim June highs that I've been talking about, that setup, that look that I like. So, maybe just in the near term, there's upside to that level, 46 from 40. I don't know. Could be. Certainly looks compelling as the RSI is shifting to bullish ranges. Actually became overbought recently. Series of higher lows on the RSI. So that's kind of interesting and compelling. And then XLE, all right, at the bottom, look at it making the turn, potentially making the turn on a relative basis. So, it's playing out. The rotation's playing out. We're watching it. You're on top of it. There's opportunities out there. Take a look at a name like NOV, National Oil Well Varco, that's seen its rating turn bullish and the relative strength exhibit a personality change, begin to outperform the broader tape. It's interesting. It's fascinating to watch. Finally, as I said, no haven bid. Here's TLT, 20-year treasuries under pressure yesterday. Down equity tape. You would think that maybe there was a flight to safety into treasuries. No such luck. Look at the RSI shifting to bearish ranges. That'll wrap us for today. I'm back at you tomorrow.